Hello everyone, welcome back to Kingmaker. Today I'm going to be going over Umami Finance with DefiAlpha. If you guys have any questions, let me know down in the comments, and I hope you guys enjoy the video. Hey everyone, welcome back to Kingmaker. Today I'm going to be doing a tutorial on Umami Finance with the CEO of the DAO, DefiAlpha. It's nice to have you here with us today.
Really happy to be here, Ali. Thanks for having me.
When I was planning this video, to let the audience know, I was thinking who else to have than the CEO of the DAO himself. So a little rundown of what we're going to be doing today is, first I would like for you to tell the audience the value proposition of Umami, and for any newcomers that are coming to the space that want to learn about your protocol and understand how it works and what value do you bring to the space, for you to answer that for them right away.
Yeah, I'm happy to do that. And I think it would be most helpful if I break down our value proposition into three different buckets, right? Because we have a few different constituents at Umami, if you think about it. So, we are advocates of the Arbitrum ecosystem as a whole. So, Arbitrum is a layer 2 scaling chain of Ethereum. It's the most popular and one of the fastest growing. We think it's going to be the hub for Ethereum DeFi apps going forward, and we're already seeing that start to happen. And so for Arbitrum, our value proposition is that we really want to support the growth of that ecosystem, and we want to do that by onboarding TVL and liquidity to the network and directing it towards our partner projects, towards all the incredible DeFi projects on Arbitrum, to support them and help them scale. That's one area where Umami is really trying to add value. And then, of course, we also have our users and our holders, right? And because we have a variety of products, particularly strategy vaults that we are preparing to launch imminently, not everyone who's using the Umami app is necessarily a token holder, right? So for our users, our goal is something we're extremely excited about. We think that it's, going to play an increasingly important role in DeFi and in attracting institutional and more retail capital to crypto, which is that we offer very simple, very user-friendly strategy vaults that source sustainable yield, high yield, double-digit, ideally 20% plus APR, source that yield from Arbitrum projects that are generating real protocol revenue, and use it to power our different vaults. And our vaults provide sort of three major strategies. There's sort of three major options for depositors, and one is a delta neutral USDC vault. So users deposit USDC. All market risk is hedged out by the vault strategy, and they accumulate yield of 20% plus in USDC. And the other two exciting vault strategies are Bitcoin and Ethereum, and it's just similar to USDC. In both cases, you deposit either Bitcoin or ETH, receive yield in either Bitcoin or ETH, and your vault deposit continues to track the performance of either of those underlying assets. So, for users, the value add is this very we found already sort of very appealing proposition of simple strategy with either risk hedged exposure or exposure to core crypto assets, and market leading yield sourced from very, very sustainable true protocol revenue on Arbitrum. And then finally, for the holders of the Umami token, the value add is pretty clear, right? The Umami token can be staked for a portion of protocol revenue. Half or more than half of all protocol revenue gets passed on to stakers as yield in ETH. So you stake Umami. Right now, APR is kind of varied on Umami. It's been a little bit lower with the markets as it is, and also actually with the recent price increases in the Umami token. But it's ranged between 10% and 50% APR in ETH for stakers. And as we launch more products, there'll be more protocol revenue to Umami to be passed back. So for holders, the value proposition is kind of this bet or play on the growth of the incredible ecosystem we're building on Arbitrum.
No, yeah, that sounds amazing. So one thing, so I guess I'll reiterate just one more time. So the three value propositions is that in general, not as a whole, is one is the revenue that you guys receive from from the treasury or from products, the delta neutral volts, and the maxi volts that you guys have as well. Do I have that correct?
Yeah, that's fair. And then the only other one we had added is that, we want to be supporters of the Arbitrum ecosystem. So that's sort of the value proposition to our partners on Arbitrum.
Talking about value propositions, I was seeing in the documents as well that you seem to be the only protocol that got the support from Dopex and Jones for Volt as well. Can you dive deeper into that? Explain the users how that work, or not yet?
Yeah, absolutely. I'm happy to. That's definitely not a secret how that happened. We have a very close partnership, by the way, with TracerDAO and GMX as well. But you're right. So, Umami's philosophy, there's kind of a few things that I think define us, and they very much connect with why these partnerships are as strong as they are. We are not interested in sort of just churning out low value add products. It would be easy to create auto compounders, for example, for every farm and LP, on Arbitrum sort of indiscriminately. We instead are much more focused on creating really sustainable, unique products that others can't easily replicate, and that leverage our connections on Arbitrum. And we, as I mentioned earlier, we care a lot about the sustainability of everything that we do. And so, that's not only with respect to our own tokenomics, right? We have a hard cap max supply of 1 million tokens, and we already have more than around 650,000 in circulation. So we don't believe in inflationary emissions there. But we also want to be sustainable in terms of our relationships with our partners and our sources of yield for our products. And so with Dopex and Jones, essentially what we did was we came up with a completely new type of product. It's similar to an auto compounder, if you're familiar with that. What an auto compounder traditionally does is that it collects the yield in whatever token is emitted to generate incentives for a farm, and just market sells them. It just dumps it and then reinvests in the underlying farm deposit. And that works, right? It works for the depositor because it increases it increases their APY, but it's very bad for the protocol that they build the auto compounder on top of, because they're seeing their token dumped. So what we did was we created something called super stakers, where instead of you mentioned Jones and Dopex, so instead of dumping Jones tokens or dumping DPX tokens that we collect as incentive emissions, we single-sided stake them. So we're actually supporting the protocol, and it actually provides sort of upwards price pressure. It increases the depositor's engagement with the underlying project. So that's what differentiated us from really any other project and got us sort of uniquely whitelisted where others were not.
No, yeah, that's something I definitely saw interesting, and which is the reason why I brought it up in this tutorial, just because it's sustainable. I just want to hit home that you guys are trying to be sustainable to not only your products, but to the rest of the ecosystem as well. And that's really the value proposition I see Umami has, is that you guys are trying to solve the sustainability problem for everyone involved, at least on Arbitrum.
Yeah, that's really well put. And I appreciate that you see it that way, because that is very much the message we've been trying to send.
So you explained how the delta neutral vaults work with TracerDAO and GMX, and you explained a little bit how you guys got the whitelist, and how it works is the opposite, is auto compounder, but the opposite. Just in case, I wanted to address for any newcomers that are confused, you can address any possible concerns. For example, one that for sure you're going to get a lot from now in the future is that you guys are going to have a cap limit on the delta neutral vaults from here on out, because it depends on GMX. But I was wondering, you could address that concern, just so people can so it can be answered in the video, and any other ones with Dopex, etc. With super staking, any possible concerns was out of the way.
The super stakers should not have any concerns. They could, in theory, absorb all of the TVL. that is currently, in DAOPEX's own farms, and it would have no negative impact on DAOPEX, and there would be no reason that, we couldn't take all of it into our own super stakers, likewise with JonesDAO. So those are some simple products that there's no real issue. But let's talk about the Delta Neutral USDC vault, because you asked a great question on that. And yeah, we're really aware of some of the challenges. We've been knee deep in this and modeling it very carefully. We've contracted with an incredible team called Balance that's built a very sophisticated Monte Carlo analysis for us, so which does sort of a scenario analysis for that vault in different market conditions. So we've looked really closely at the risks, and I can highlight, to be clear, these are not really risks for depositors, but they are risks in terms of scalability of these vaults over the next month or two, because there are challenges when you are possibly trying to onboard, for example, $100 million in TVL into a new vault, and you're building it on top of GMX, which is one of the most robust and high TVL projects on Arbitrum, but even so, there are some considerations. So we can go through those. The first is, as you said, GMX itself. It's one of the premier projects on Arbitrum. It handles tens of millions of dollars in transactions on a sort of a monthly basis and generates an enormous amount of fees. It has the deepest liquidity for stable coins, Bitcoin, and ETH on Arbitrum. In fact, the deepest anywhere for some of those pairs. But it's still, I think it has currently, a little more than 200 million in TVL in their liquidity pool, right? And our vault is built on top of GMX's liquidity pool. We're taking the USDC that depositors provide, and we are minting their GLP token, right? Which means that we are liquidity providers for them through that vault. We think that GMX can absorb probably $100 million based on our estimates of additional TVL before we would be, effectively diluting ourselves and other GLP depositors by sort of overwhelming it with more TVL than it really needs to facilitate the transactions that it's handling on its exchange platform. Now, that won't be an issue indefinitely at all. We're very bullish on GMX, and I think one thing, for users who aren't familiar with GMX, so they are this Arbitrum native exchange. They've mostly been known for leveraged trading, leveraged perpetuals trading. So sort of very attractive for degens, also potentially for people who are trying to hedge. But there's a whole other market and a bigger market for them, which is just spot trading. As I said, they have the deepest liquidity anywhere for ETH, BTC, USDC routes. And we're seeing more and more whales migrate to Arbitrum to take advantage of that. We're seeing lots of trades being routed increasingly by DEX aggregators through the GMX liquidity pool. So we think that spot trading is going to be huge for them, and they're building this awesome and very exciting new spot trading platform called X4 that will launch, maybe sometime in the next 6 months. So as that happens, GMX will definitely be able to absorb more TVL, and it'll need more TVL, at which point, the vault's cap can go above 100 million. The bigger near-term concern, and this is actually, a little bit of alpha that I'll be sharing. It's really not a worry for depositors, but our other partner with this project is TracerDAO, and TracerDAO is an incredible project. They have a completely new DeFi derivative product that's really kind of unprecedented, and it has very exciting features. The main quality that we're attracted to is that you can use Tracer's platform to create hedging positions that never liquidate. So you can take leveraged hedging positions and never get liquidated. And that's kind of what enabled us to build this vault and have it be low risk for depositors. But Tracer just launched their V2, they call it, their V2 model for these perpetual pools. And, like anything, it's crucial for our vault that there be sufficient liquidity to absorb, the amount of deposits we'll be putting into Tracer's hedges. And, it will take time, inevitably, for Tracer to scale the liquidity, especially now that they're sort of just launched this sort of new iteration. It's greatly improved of their perpetual pools. So, we're working with Tracer. We're very close collaborators with them. We have some strategies to help them scale the liquidity, and we will be doing that. But I think we are probably going to keep the cap on our vault actually quite a bit lower than the 100 million hard cap in the beginning, to kind of ease in all of this new TVL onto Tracer's platform. So that's sort of the other factor that plays a role in how quickly we can scale. But as I said, our goal is for what users need to know, what potential depositors need to know, is that we are basically planning to make July a sort of invite-only whitelist month, so that Umami holders will have a chance to deposit first, and then partners, certain institutional investors that have expressed early interest, they'll have a chance to deposit. And by using that whitelist, we'll be able to sort of slowly ratchet up TVL, make sure that it won't be an issue at all for the GMX platform, but make sure that the new Tracer V2 pools are able to absorb them. And then, we have some more exciting products actually launching in August that will help resolve they'll provide a lot of liquidity to Tracer. So once that's in place, the sky will be the limit, and we can start scaling to 100 billion and maybe beyond, depending on how fast GMX grows. So that's our vision around what you mentioned with the vault caps.
No, yeah, it's really exciting. I'm assuming, since you didn't specify further on those products, we can't talk about that yet.
We can. Yeah, we can.
We can? Okay. If you want, give them a little rundown or tutorial or like an overview of it, so they can understand it.
Yeah, and I'm happy to share this. I mean, we appreciate you having us on, and we move so fast at Umami that we do have alpha to share with you since last time we spoke, and this is a bit of it. So basically, nothing surprising. As I mentioned earlier, we want to build our vaults to align with three core strategies, right? And one was USDC, and that's the one that's going to be launching first, and it's going to be launching very soon. The other two are BTC, Bitcoin, and Ethereum, ETH. So the next two vaults that we're going to launch are going to be those two strategies. And here's sort of, I'll share a little bit of color on the mechanics of them, because it segues with what we were just talking about and something that I personally find exciting. So what we've really learned over our past 6 months sort of executing on this current strategy at Umami is that DeFi is still so young that if you're as ambitious as we are, right? And in our case, we want to onboard hundreds of millions or more in institutional capital to Arbitrum. You can't just sort of build the products. You also have to actively collaborate with partners and build the ecosystem, because no DeFi project exists in a vacuum. And so what we realized, going back to this issue of the Tracer pool liquidity, is that if we want to have the basically through the delta neutral vault, we're taking short hedging positions to hedge out market risk. If we want to be able to do that and have enough liquidity to do that, there needs to be liquidity in the long side as well on the Tracer platform. And conveniently, right, the ETH and BTC vaults that we're building will be providing liquidity to the long side of Tracer. So they will be basically, the Bitcoin vault will be hedging out the Ethereum exposure that one gets from having exposure to the GLP GMX pool asset, and then increasing the exposure to Bitcoin, right? So that you end up with a vault that tracks the performance of Bitcoin. And likewise, the same thing, but in reverse for Ethereum. And so then what that does, that we're really pleased with, is that will balance out liquidity for our two partners, right? Because, again, we can't succeed unless they're also thriving. So for GMX, if we were only doing the USDC vault, we might be overwhelming their liquidity pool with just USDC. And that could throw it out of balance because they have certain targets for how much ETH, how much Bitcoin, how much stables they want in their trading liquidity pool. But now that we're going to have the ETH and BTC vaults, now we'll be having the ETH and BTC deposits as well, and we'll calibrate our caps on these different vaults to help maintain that target balance. And then likewise, they'll be providing liquidity to different sides, long or short, for on the Tracer hedges, which allows Tracer to scale its liquidity in a balanced way. So this, we think that these are going to be very appealing products just in their own right. There's been enormous institutional interest. To kind of put a point on it, the ability to get, to single-sided stake ETH and get double-digit APR is unprecedented and massively attractive, right? I think that right now 3 or 4% is considered, kind of market leading for single-sided staked ETH, and similar for Bitcoin. So huge market, but along with just being excited about the amount of TVL capture and being able to offer a product like this to so many people, we're also really happy that this is going to help support GMX and Tracer and scale their liquidity, right? And kind of help be the rising tide that lifts all boats. So that is our very near-term plan. Those two products are in the works and will be launched probably August 1st. So this is all going to be rolling out very soon, and we couldn't be more excited.
No, yeah, that's something very exciting that I'm actually really happy to hear. I had a general idea where you were leading with that, just because it seems like you work really well with them. So the only other products or parts that I know of that you can further assist was that. I'm glad that you're able to, that you're actually taking the initiative to go help solve their problems as well, because you're right, it's called DeFi Legos for a reason. We build up on top of each other, and if they grow, you grow as well. And one thing I wanted to specify, just in case anyone asks in the future, you said the near-term strategy, just so the listeners know, could this change in the future or not? Just so they ask. So in case you decide to add any additional strategies or change your techniques, parameters, or whatever, will that be possible or will it not?
Yes, it will be, and that's actually another little off the drop, because this is something that we've just been talking about sort of very recently internally. We're very excited that we have realized the smart contract code that we've built for our first vault, with relatively minor changes, we can make it highly, highly composable. And as a result, this vault, which right now, specifically mints GLP and then mints sort of, just these short positions on Tracer, BTC and ETH to maintain a delta neutral strategy, you can change the parameters, or you can slightly alter the code so that it can very easily change the parameters for all of those and change the allocations. Well, or even, we expect, for example, that GMX is going to be adding additional tokens to its liquidity pool, to its GLP liquidity pool. And as that happens, we're going to want to be able to hedge those out. So by making the smart contract more composable, being able to, let's say they add CRV to GMX, well, we can then not only take a short position on ETH and BTC, but if they have substantial CRV, we can hedge that out too. And again, all these other strategies that we described, like the BTC and ETH vault, are really just variations of this core structure that we've built. So basically what's going to happen is that we're launching the USDC vault, and very soon after we're going to finish this sort of more composable smart contract version, and the first two vaults that will be based on that will be the BTC and ETH vault. But the sky is the limit on the variations we can do. That being said, sort of as I alluded to earlier, the way we think of our value add is that if you're a really sophisticated degen or whale, particularly if you're not so large that your buys sort of move the markets, your deposits move the markets, you could probably replicate some of these strategies yourself. But our goal, one of our key value adds, is basically creating really simple vault strategies that track core forms of asset exposure, like track USDC, track the performance of BTC, track the performance of ETH. And there's just an enormous market for that. It's kind of the special ingredient in a sense that makes the entire recipe work, if you will. In that now that as soon as we took something like GLP and Tracer and we captured their yield, but packaged it as a simple delta neutral strategy, suddenly there's all this institutional investor interest, right? And same with ETH and BTC. So I'm saying all that because we are probably going to remain very focused on those three core strategies. We might have some other variations as well, which again, we can do very easily. I think one strategy that could also be very saleable would be deposit ETH, maintain a delta neutral position, and accumulate yield in ETH, right? So a delta neutral ETH vault, we could very easily do that. Maybe with BTC as well. And we've heard some interest from people in maybe more of a portfolio structure of some sort, so kind of aggregating BTC, ETH, and USDC. So we'll explore different things, but those core vault strategies, our real focus is just building those up and finding additional sources of yield along with GLP and Tracer, so that we can absorb as much TVL as possible, and then the sky is the limit, we think, on how much we can scale. So really those three core strategies, USDC, ETH, and BTC, are probably going to be at the heart of what Umami does for
Okay, good. No, yeah, I'm glad that you specified that. There's nothing wrong. Like, you're right. Like, you should focus on one thing and make it perfect and good first before, like, you don't want to spread yourself too thin. So I definitely agree. Like, make these products or these current strategies the best they could possibly be before you go. I know DeFi goes really fast, but it's also kind of like a little bit of a small world. So I wanted to bring that up just in case, let's say someone from Rocket Pool is listening, or someone from Curve, or someone from SNX, for example. I wanted to specify just in case they were interested or something in the future.
Yeah, that makes sense. And I mean, to be clear, just thinking off the top of my head, you listed Rocket Pool and Curve. I mean, most DeFi projects, well, not most, but there's many DeFi projects, could be very logical potential partners for future vaults, right? So someone like Rocket Pool, who's our ETH, ETH derivative token, captures the yield from validator nodes, or Curve, obviously, which is sort of very much, it performs a similar function in the ecosystem to GMX and also captures fees, right? Like, those are exactly the types of projects we'll be looking at as we try to expand and diversify our sources of yield to power these vaults, right? Like, Curve is an obvious choice for stablecoin yield. And Rocket Pool is a great example of a way to potentially engineer a high-yielding ETH vault. So, that's how we think about that, and we will be talking with more people in the future.
Yeah, it's good. I'm excited to hear that, and I'm excited to help educate local and current DeFi holders, and hopefully new ones enter the space about your protocol. One thing I just wanted to say, just because we're already getting to the end of the video. I was about to say show. This is not the podcast. One little show. If you guys are new, we're Kingmaker. We have a podcast that we release every Monday. If you guys want to listen to it, I'm gonna put a link in the description. But having that out of the way, is there anything else that you feel like any newcomer or anything they need to know or understand to cover your protocol, or do you think you covered all bases so that any newcomer will understand how it works, the value proposition, and everything involved?
Shouldn't we talk a little bit about staking Umami itself, or do you think that that's been covered?
I think it's good that we go a little bit further in it. Basically, what we covered so far, in case the audience you don't remember, he gave us a quick rundown. So the rundown he said earlier was that they get the TLDR is that they get fees from the products that they build, and then they also have a treasury of sustainable yield products such as GOP. That's just the first one I know off the top of my head. That also goes back to the holders, at least that I know of. If you want, you can dive deeper on that, since you're right. That's the last thing we haven't covered.
Mm-hmm. Okay. Yeah, so I'll go just a little bit deeper. I think a few things, a lot of it's just kind of highlighting certain things that we did touch on a little bit for potential holders. So the best way to think about Umami is think about all of the failures and shortcomings of, sort of DeFi summer era or sort of fork frenzy era DeFi tokenomics, the crazy inflationary emissions, the lack of a clear, value proposition for stakers beyond kind of this Ponzi notion of getting more, of the native token through more emissions of it. Think about all those shortcomings and then think about what the exact opposite would look like. And you end up with something like Umami. And there's some history behind that. Umami actually was originally an ohm fork. That's how we came to be. And what we are now is a massive pivot from that past under a completely new team. But essentially with Umami, we went for sort of what we think is the most blue chip and sustainable possible tokenomics models. So we have a max supply of 1 million Umami, 650,000 of which are already in circulation. And the remainder are either locked in 12-month team vesting contracts. Some of those are also just sort of in our LP, but haven't entered wider circulation, and then a small amount are in reserve for potential very small capital raises. But again, that would be less than 15% of supply or 10% that even could be used that way. And then we have this hard cap at 1 million. And so we have this very no dilution possible tokenomics model. We have zero incentive emissions of Umami. It is simply not an emissions token in any way. All of our products have to have sustainable yield. We would never build something that relies on incentive emissions at all. So with that, what's very exciting, we think, is that along with those features that I just described, we also, provide Umami stakers, so people who hold Umami and stake it, with revenue in ETH. Protocol revenue, to the Umami treasury is passed on to stakers as regular yield in ETH. And we, the yield is sort of pushed multiple times a week to stakers, and then they can collect it at any time. And so they just build up more and more ETH, by virtue of staking. And that's, something that going to be the future for DeFi. I think, basically at some point, every project is going to be asked, how do you pass on your protocol revenue? How do you pass on your protocol revenue to stakers? And what is it denominated in? And it better not be your native token. It better be a stable coin or ETH or something like that. So we think we're ahead of the curve. And again, because we have this max supply of 1 million, Umami, most of which is already in circulation, there can't really be any dilution for stakers, any material dilution. So as we launch these vaults, which of course collect fees, they collect fee revenue from depositors, that stream of protocol revenue just grows, and the amount of ETH that we're able to pass on to our stakers grows as well. And that should, really, really support the value of the project and the yield for stakers over the coming months. So that's sort of the basic principle behind the token itself and its tokenomics, and something
that's something incredibly exciting. And I'm actually glad that you brought it up, because I almost completely forgot about it. Because that's something really interesting, a new token model where you guys don't have any emissions, or at least that's the goal so far. And that's something that I haven't seen yet, because there's not too many protocols now that give sustainable revenue. Like, I could probably count them in like one hand, or max two. And the three different models that I see the most of is like the escrow model that mini GMX has, where like it gets escrowed over the year, or Curve where they give you stable coins, but they also have to give emissions, just because if you like reinvest the Curve, you're not getting diluted. And this is a new model that I'm actually really excited about, that we haven't seen so far, and it'll be really interesting to see more protocols that go to this space. Of course, you're doing it right away. There's some protocols that the emissions are gonna run out soon. Of course, I'm a CVX holder myself, so like the first one that I know is that their emission schedule is gonna at some point it's run out, right? And then they're gonna have no more emissions. I don't know any other protocol that has no emissions, or they're getting close to running out of emissions in the relative future. It's exciting to see what other protocols follow the same path that you guys have chosen for yourself.
I mean, and there are a lot, right? It's a growing number. Redacted Cartel, which has a similar backstory to us, they also originated as an ohm fork. They are almost complete in the process. They've almost completed the process of reducing their emissions to zero, and they've launched Hidden Hand and Pyrex, which should, are both actual products, right? Sort of like how our vaults are actual products that should generate revenue for them instead of just sort of being about the treasury assets that they have. So, that's one example of another protocol pivoting to, real revenue, and I believe that their revenue will also be paid out in ETH. Abracadabra is, now has a pretty cool staking option for the spell token, M-Spell, which sounds a little bit like Umami, although I don't think that was intentional. Where it can be staked for protocol revenue denominated in their MIM, Magic Internet Money stablecoin. So that's another similar approach. Obviously GMX does it. So, I think that we're going to see, more of that over time. I'm seeing it pop up. Quite a bit. I won't go through the full list, but again, as we discussed, that's the wave of the future. And we are seeing that pivot, and we're just happy to be a little bit ahead of the curve on that.
One thing I will tell to people is that we don't have enough time in this video to go over all these different projects. I do have a podcast with Redacted that I will put in the description if you want to learn more about them. And Olympus is too big of a protocol for me to cover in this video, but at some point, hopefully I get to do a podcast with them, or I'll do a tutorial on them in the future. Just to have a little idea is that Olympus, Redacted, and Umami originally started out as, I guess, it's like a rebasing token where it had really high inflation. The main appeal of that model was to accumulate capital for the treasury. That's the most layman term I can think of to explain in 10 seconds.
It's well put. Yeah.
But yeah, continue. I just wanted to address that because we have addressed a lot of different protocols and we haven't said anything else. So I wanted to explain that a little bit.
So yeah, I think that covers it for, in terms of talking about our tokenomics. Did you have anything else you wanted
I think
to
we
touch
covered
on?
everything so that a newcomer or a new DeFi user that hasn't looked into Umami will know how it works, and you explained everything really well. Is there anything else that you want to explain before we go?
Can I do a shill for a partner project?
Of course.
Okay. I appreciate that. So, and you might not be surprised which one I choose given what we've been talking about, but TracerDAO is a really awesome project. They've been great people to work with, and we have been super excited to have been able to collaborate with them. And we do think that they have a product that is so innovative and new that it's going to play a central role in DeFi as it is in our vaults. It's central to our vault strategy right now. But basically for those who have a bit of a degen streak and are sort of quanti, I just want to share sort of a few potential opportunities with Tracer. So the first is, as I mentioned, we are going to be launching this delta neutral USDC vault that uses Tracer hedges, before the end of the month. And as soon as it launches, right, we're going to take in all this TVL and we're going to be, offsetting all of our market exposure by depositing into the short side of Tracer's 3x BTC and 3x ETH perpetual pools. So what that means is that, the way the Tracer works is you have a long side and a short side of what they call their pools. And, in our case, we're going to be depositing very, very heavily into the short side of these sort of, really popular BTC and ETH pools that they have. Now, when that happens, that will at first create some imbalance in the liquidity on both sides of the pool. On both, on the long, it'll make the short side, have much more TVL than the long side because we're depositing all this new TVL into the short side. And so there's a pretty cool opportunity, and I'm sharing it because, again, we just want to support more liquidity into Tracer, which I think we will be seeing very soon. But for those who are early movers, there's a pretty awesome opportunity where if you provide liquidity to the long side, once we've launched this vault, the way that Tracer structures its pools is that if there is a liquidity imbalance, whichever side of the pool has less liquidity provides outsized rewards, outsized returns for depositors. So we're in this interesting situation where we're probably approaching the bottom of the market. Therefore, these sort of 3x ETH and, so 3x levered is what that is, and 3x levered BTC long positions in Tracer's pools could on their own be very lucrative, but because of that, what they call the skew, the little imbalance that will be created as we scale our vaults and put a lot onto the short side, there could be an enormous return to being on the long side. You could get the benefits of, increased, price of BTC and ETH on a 3x levered position, plus we'll say one or two, maybe one multiple turn for free, essentially, because of what they call the skew. So, basically what this would mean is, being a steward of the ecosystem, supporting liquidity in a really exciting project that is central to our vault strategy and really central, increasingly to the Arbitrum ecosystem, and getting huge outsized benefits, particularly as the market is taking off. So we wanted to flag that, they just launched these V2 pools. They are beginning to be discovered, but they haven't been yet, and there are really exciting opportunities for depositors. And then also, I guess, general shill is that their token is soon going to have sort of a vote escrowed locking mechanism that'll allow people to, lock their TCR to then direct future TCR emissions. They really haven't had any token utility before, and now they will. So all these things, this is, I think, some of the best core, tech in DeFi. Really incredible team. They're supported by, sort of a parent / VC, Mycelium. They're sort of an off-chain tech provider. Doxed team, really well run, but just still kind of a hidden gem. So we want to see them thrive. We're going to be doing everything we can to support their project, but kind of for those who are listening, I strongly recommend they take a look at Tracer.
Actually, now you brought that up, that's actually funny because I actually been in talks with them. So a little show, I guess, from Kingmaker is that TracerDAO is actually one of the upcoming DAOs that I've been speaking with to try to get them on the show to talk about further. I've actually heard about them, look into the product. I am excited about them myself. TLDR about why I'm excited about Tracer is everything that he said, but I think they said you can make unlimited pools, or they can make unlimited 3x positions for unlimited pools. So right now they BTC, ETH, and oil. So any asset in the future, any asset can have a pool, which is really exciting, and you can earn APR in their native token as well. That right now have actually really decent returns, and they get APY wise is in their natural token, is something that I would really highly recommend. A lot of the people in this space, CEOs and people I've been speaking to, are excited about them, and I am as well. That should be coming out, I don't know, next week, 1 or 2 weeks. I'm gonna have a podcast episode with them and with Tracer. I'm gonna do an announcement on the Kingmaker Twitter, so follow that if you haven't already.
Well, I'm really happy to hear that, and agree with everything you said. You made a good point about the ability to create, your own pools, right? I think that's what you were saying, which is true, right? Anyone can go and create a pool for basically any asset that there's an oracle for. I wasn't going to mention that one because Umami is setting up a lot of cool new pools ourselves, but cat's out of the bag, I guess. Obviously, it's known publicly. So yes, that's a great thing that people can do as well.
They revealed something I wasn't supposed to?
No, I'm just saying it's publicly known what you said. It's just that I was not going to mention that anyone can go onto their app and create, say, a new perpetual pool, right? Collect a cut of the fees, because that's something that Umami is actively doing right now. So we were going to keep the market to it, but it's totally fair game for anyone to share and talk about. So I'm sure Tracer's glad that you brought it up, and Umami will just have to work even faster now to get this out, get those out before the podcast goes live.
My bad. Worst comes to worst, I could edit this out later.
No.
But
it's fun, and people should know how great of a platform Tracer is.
No, but I think it's really noble that you go and you try to help all your partners out. That's something that I really appreciate. Talking about partners, I just, so that everyone know, that I don't know if you've seen the Twitter, but the episode with GMX have been delayed. I don't know when I'll be able to do the episode with them, but I'm gonna try to get that out as soon as possible. So yeah, that's the two partners that they said right now, and I already have one with DopeX. Jones is gonna be coming up soon. Hopefully So hopefully by the end of the month, I actually cover all your partners that you have right now. I should have them covered already by the end of this time next month. That's the goal, at least. The episode's been kind of going really long. So before we end this episode, show whatever you want to show, whatever announcements, or send them in any direction that you want them to go before I end the video.
Make sure you can find Umami's. The Twitter handle is at Umami Finance. That will provide a link to our Discord, and just keep tabs on us because we're going to be announcing really soon our vault launch. And so I think there's going to be a lot of exciting news flow. So just follow us, but nothing else to show beyond that.
I hope you guys enjoyed the video. Before the video ends, I hope you go see the ad towards the end. It would help us a lot over in Kingmaker. But if not, I hope you enjoyed the video and you had a wonderful day.
Thank you so much for having me on, and can't wait to hear this.
Hello everyone. Before you leave, go get your free $100 when you deposit $250 or more with Onjuno. They're a crypto-friendly startup bank that lets you get your paycheck in crypto while earning 6% on your USDC and ETH. If that's something that's interested you, go check them out down in the description below. The reason I'm doing this ad is because I use Onjuno myself. I love their product. I love the app, the kind customer support. So I thought when they gave me the offer to do the affiliate link, I said, of course. I hope you guys check them out. I like them. I think you will too. Have a wonderful day, and I hope you enjoyed the video.